Welcome everybody to the Sofi Weekly. Although we're going to talk about other stocks today, so we're doing a Friday edition of the Bootleg Weekly featuring Tanner,
Hello.
and
Hello. Good to
Roy's
be
going
at
to
your
try.
show.
Roy's going to try not to talk about Palantir, although I give him like under 2 minutes. And we have a little bit of SoFi news, and I have the Eagles game in the background, so I'm probably going to be semi here,
Nope.
but but welcome.
And
How was that
someone's already
intro?
talking about following you into hymns. I do want to hear some of the case on that. I wanted to talk some Celsius with you guys, some Tesla. Hear your guys' opinions of everything going on there. So, but to start out, let's talk some SoFi. So we did get some new news recently. By the way, Roy, how you doing?
Having a pretty good week, two of the companies I hold and are entering the S&P 500. So I won't name names, but it's been pretty exciting. It's been a
Boom, maybe 15 seconds flat.
I did not name any names. I'm not even talking about it. I just put on a hat. Don't know what you're talking about.
Yeah. I'm just recording this on my Dell PC, and
oh yeah,
what?
I
well,
I told Roy, like Roy sent me the news about Palantir and the S&P, and I was like, oh damn, like congratulations, man. He doesn't respond, and then I messaged him like 15 minutes later. I'm like, by the way, you're talking to an official holder of Palantir as of today, and he just like ignores me.
How did I not see this?
Wait, you hold Palantir?
Oh man,
I hold the S&P, right?
Oh. Come on. I did not see that tweet, actually, that message. I see it now.
TJ is saying, dude, you're getting a Dell. Does anyone remember these commercials? Roy, I'm going to go to you as our resident old person in the chat. Do you remember this commercial?
No. I've never
TV out of luck.
So I don't really, yeah.
Okay, so then in a way, I will soon hold. So you're not a holder of Palantir just yet. It'll probably happen over the next week or so. But
you just tell me when you want to buy in cheaper, and I got you.
Yeah, all you need to do is mention that you have it. It's probably already going down right now. So that is another thing. I wanted your bear case on hymns after this.
My bull case, you mean?
Well, your bull case. Everyone else's bear case.
Right.
Yeah. But first, we have a couple things of SoFi that we do actually want to cover. First off, today we got website traffic information for SoFi. I thought that this was quite interesting. Let me show you it in two different forms. Here, just tracking over every month. Bear with me. I can make this way bigger for you guys. There. Okay, so this shows over 12 months for SoFi's website traffic. All right. And the last 2 months, we've had record-breaking website traffic for both July and August, which are both in Q3. The last month will mark the full quarter. Hopefully, we can continue this streak. Tevis, is this the million new member quarter?
Probably not, but it will be a good quarter. Given
is it the 800,000 quarter?
I don't know, man. Maybe it could be. I'm more bullish, I feel like, than you are on these member counts. We'll see. I do think it's going to be definitely up there. I did say a couple weeks ago that this could definitely be the 800,000 quarter, and you thought that was the stupidest idea in the world.
I didn't think it was the stupidest idea in the world. I just I'm looking at it like I find website traffic does not actually correlate very well with new members. I find app downloads correlates much better with new member signups, and that I have not seen Nothing bad, but not like great insight there.
I think the Anthony Noto comments are also in the interview that he did with CNBC on Wednesday. I think those are also going to be somewhat insightful when we're looking at new member additions for Q3. So we can talk about that as well. But what he's seeing, and now the market is pricing in, like a 50 basis point hike. I don't know if you saw that, Tanner, or not. As opposed to a 25 basis point hike. Like I just think that overall the signs that we're seeing are positive, and with what they're releasing on the credit card side. Again, I don't know. I don't have any. I'm just trying to put together a thesis based on the signs that I see.
Yeah, I mean, Roy, anything to add to that? I can also bring up the Fed Watch tool. I have it up here. It's not as high as it was this morning.
Yeah, it's 30% for a 50 basis point.
Yeah.
So it was a coin flip at one point, 51%, I think, actually in favor of the 50 basis point cut. So that's obviously something that's bullish for SoFi. Now, the other piece of data that we have as far as member counts is the fact that SoFi already cut rates that they were offering. And so that can mean any number of things, but one thing that it signals to me, at least, is that they're happy with where member growth is. Otherwise, they would be willing to pay more, or not make quite as much just to entice more people. So they're not at that point. And so I think that this is a quarter where we will see 800,000, maybe 826, something like that. NFL season starting does not hurt at all.
826? Why?
826.
Why so specific?
Because that's what it's going to be, brother.
All right.
I'm doing okay on the guesses. That's all I'm saying. I so far I'm usually wildly off on, but I do think that
quarter 826,
826,000 member growth,
as in over 100,000 over our highest ever quarter.
That's right. And
he's like 20,000 where your guess was. What are you talking about? You're guessing over 800 too. You're talking like you're mind blown.
I think there's a decent chance that we do see 1 million in a quarter in quarter 4. So we'll have to see what
that one I can subscribe to.
But the start of football season is very good for generating those extra members for the club. So
I just want to add, I think that the change in rates on SoFi side is more indicative of their happiness with deposits versus their happiness with members. I know that is very well correlated, but it is a difference in the way that management is looking at that.
Yeah, it's not just one number, but it's things are not bad.
Yeah,
they would not be cutting that rate if they were like, oh man, we got to really bring in more deposits and more members. So
yeah, definitely. What's funny too? I think that's the exact same number. If Danny pops into the chat, I think it was like 2 quarters ago. He's like, it's going to be 826. I think that was the exact same number. And I was like, how do you know? Like, why is that such a specific number? And he's like, just wait and see. And then we saw, and it was like 250,000 off.
He was just early. That's all.
Yeah. But something about these predictions all on that 800 and something mark. Just to go back really quickly to website traffic here, you can also see how, that's not what I wanted. Sorry. So used to running a solo show. You can also see how they're trending with the other fintechs as well. So you have Robinhood, Ally, Upstart, Lending Club, Nubank, Venmo, Cash App, PayPal, Chime, and Coinbase. What do you guys see here in terms of standouts? I mean, Robinhood holding up a very good, sort of 2-month mark. They're all sort of breaking out these good 2-month marks, except for Coinbase, steady decrease from extreme highs of like crypto mania in March, and Robinhood saw that as well.
Venmo. Yeah.
Let's see. Venmo. Yeah. Doing good.
Yeah.
Doing strong. Do I have a chart for Venmo? Yeah, I do. Well, there you go.
Couple of 14s.
Couple of 14s. Nothing like this baby right here. But hey, I'm not allowed to mention that this episode, so
we're not talking about that one.
Not going to mention that one.
In weeks where that one doesn't set a new all-time high, we don't talk about it. So
it did set a new all-time high this week.
Oh, that's right. Okay, so
intraday.
Yeah. It doesn't feel real when it doesn't close at that. So yeah, sure. PayPal is up too. That 517 and 511. Those are very nice. I mean, PayPal's killing it. It's not just today it died, but yeah, website traffic is up a good bit there. So that doesn't always mean anything like you mentioned, for all these, but it's not a bad thing when you have more than usual website traffic.
It is weird. These last 2 months have been very particular, where they're kind of either like much lower than they usually are trending, or they're much higher than they're usually trending on thing. I'm using the same source for all of it. It's all similar web. So
the Cash App's easy to explain. Clearly, Venmo is killing Cash App. I mean, that's the only conclusion there. So
that's it. Yeah, that happens over 2 months. They did one ad campaign. They said, "Hey, are you a Venmo? Stop." Or are you a Cash App? Stop.
Yeah.
I did see some PayPal advertisements. I'm sure you saw that Will Ferrell wind chime thing.
Yeah, it's mildly funny, but I'm like, I never get those kind of advertisements. I'm like, why? So it's fine. They're printing money, so a little bit of that's okay.
Is that indicative of the age bracket that PayPal is knowing that they're going after?
Probably, yeah.
Hey, there's money in every bracket here. I mean,
yeah.
But Will Ferrell's he must be in his 50s now. That's probably the average client.
The wind chime client. That's I mean, millennials, you guys don't do wind chimes, and zennials, like, no, not at all, right? So
no wind chimes for me. No. I just made a stupid purchase, but I'll tell you guys about that in the after hours, just because it's not finance related. But what's it called? Yeah, Tim here is saying he's seeing SoFi ads everywhere. I have signed up for SoFi as a Canadian, so I don't get access to actually create the accounts, but they know they have my email and stuff. And they send me email advertisements. They are telling me about mortgages every other day, mortgages and personal loans constantly. I don't know if you guys are seeing advertisements like on television or where you're seeing it. I saw the Justin collaborations, the $100,000 giveaway stuff that they're doing as well. I don't know if you guys saw that, but interesting.
Yeah, Michael said that he sees it all over TV and he's Canadian. So, yep. I don't know. Their advertising spend is a little bit weird to me. Like, not the partnerships and the naming rights and NBA stuff. But quarter one, that's what faked me out. Was I was getting, and I signed up as a new SoFi user, and I was getting all kinds of personal loans and credit card announcements. I'm like, hey, they're going to grow lending. They're doing all this, and other people were saying the same thing. And no, that wasn't the case at all. So I don't know if their marketing is like on autopilot, or if it's just prepping the ground for when they actually launch and want to open up things, but it's a little odd to me.
Yeah. Tevis, how's the game?
Yeah, game's good. Yeah, I saw Chris also posting about the ads on the student loan front earlier this week, which is interesting because on one side, everybody's seeing all of these ads and promotions and whatever being run, but then the other side of it is that they're limiting. Sorry, I'm like completely out of it. What did they change recently? That they're lowering the APYs on the checking and savings account, and so one side of it could lead you to believe that we're okay to, like, we don't need to have the highest top end promotion for the APY side of things from a new member edition. But then the other side is like, hey, we're now pushing, student loans to you more heavily. We're pushing mortgages more heavily. We're pushing all of this stuff. So it's not necessarily like at least to me, what I glean from that is it's not that they are ramping up or ramping down. They're just changing the mix of what they're pushing out.
Now, some people are thinking that potentially they might be ramping up this quarter. Do you think that that is a possibility going into some rate cuts here? And what I think is not just anticipation of rate cut, but rate cuts. So even the loans that they sign up here today are still going to look better priced in the market versus, maybe what it'll look 3-4 months from now.
Yeah, the target rate looks like, and let me share this. This is zooming out a little bit further with the same data that you should be for the rate watch. So this is what it's looking like in December for probability. So biggest probability is we're at 400 to 425 or 425 to 450. So I mean, we're not going to get there in one cut. So the market is certainly pricing it in. I think it was Waller or Walker, one of the Fed governors, had some comments on this today as well. And it seems like that they're very open to the possibility of multiple cuts. I actually think that the market is, sometimes the market front runs these things and is just, too exuberant one way or the other. But I think this is about right where I would target it. So we'll have to see, but it would behoove SoFi to go ahead and open up that lending book while rates are still currently where they're at.
I mean, hey, why wait, right? Just do it all. Do a 100 basis point cut right now. We'll get it out of the way. Market does a little dippage, and
that would be incredibly bearish. 25 or 50 is what the market's expecting. Either one, I think we're going to get the same result. It'll be couched in language that we're like this. We're declaring victory over inflation. Things are great, and so we're doing this. Doesn't mean we're going to do rates cuts this time or every time, but we're going to start the process now. And boom, they've already even come out with the language, and they'll go into a silent period soon enough. But the federal governors are all just kind of there on the same page, and it's more of a question of how much rather than whether they're doing it or not. So yeah, 100 basis points would be the market, or the economy rather, is falling apart. Unemployment's just ramping up, and yeah, the jobs numbers came in not great. They were not terrible, but it's really the revisions, I think, the reason why the macro kind of fell apart today. So if we get a lot more of that, then, if they do something more aggressive than 50, those will be bearish cuts. And that's not really what we want to see. So
do you think if we get a 100 basis point cut that the S&P drops 10%?
It would probably not do that, but it would be pretty bearish. That would be
10%.
I think
maybe 10% is hard, but I think it would be, dude, 50% is not the majority. 75% is a 0% chance. If they do, or 75 basis points, if they do 100 basis points, that is so far off the charts that there must be a shock where even if it's a single candle, that there would be mass selling.
Yeah, the market doesn't like
uncertainty,
and that's one thing. I don't love the Federal Reserve. Jerome Powell has been above average as a Federal Reserve president, but that doesn't mean a lot. I think we've had a lot of below average guys. The one thing that he's done especially well is help the market know what to expect. That usually, and that's why September the market's so confident. Usually the market's pretty confident because of Powell. Now sometimes they front run things and they guess, but he is very careful in what he says. And so coming out with 100 basis point would be incredibly bearish, just because the market's not expecting it, and then it would look for reasons why that cut's happening. And there's no good reason for that. Like, it's either the Fed sees that they're super late and these are emergency cuts or their equivalent of emergency cuts at that point, because the economy is melting down, or you could look at the U.S. national debt, that the reason why that cut is coming in is for that reason, or to save housing, or a combination of all these things, and the sky is falling. 10% in one day, absolutely not. But we could see a 5% drop in the S&P 500 in one day on the basis of that. It would not. I wouldn't bet against it. I wouldn't bet for it, but it's like it's not a crazy scenario. Although 5%, I've not seen 5% close in a day. I think since COVID. Is that right?
I'd be hard pressed to believe that because I've definitely seen a bunch of 3-4%. Well, maybe not 4%, but I've definitely seen a good handful of 3% days. Yeah, no, 10%'s way out of whack. I don't know. Anyway, what's it called? So, are you guys in the camp of 25 or 50 base points in this cut? And is it making a difference in your strategy for trading at all?
50, but it's not much of a difference. They're just late. They really are. So,
yeah, the same. It's not making a difference. I have cash that I'm just sitting on, and I think as we continue to see weakness over the next couple of weeks, I want to add. I almost added QQQ today, and then Roy was like, "Don't do it."
Yes, yes. Let me share this, and you guys can thank me. You can all thank me. Thank Tevis too. Give him credit where it's due. The man sent this to me.
I'm also in the 25 base point camp.
Can you throw this up?
I think it'll be back to back 25 base points.
Should I buy some QQQ today? I'm like, haven't we suffered enough? And thankfully, he went ahead and did not buy. That's why we ended up bottoming out and actually rising a little bit towards the end. Otherwise, like, it was already the worst week of the year. Way to start off September with the seasonality stuff. So,
yeah.
Thank you, Tevis, for saving us from some more pain.
I am going to play a game where I'm going to put 10K in either Nubank or Palantir, and you guys have to debate amongst yourselves. And whoever loses, I put 10K in their stock.
No.
No, I'll just stay quiet. Roy will stay quiet. We'll let you buy Unity.
Keep taking Unity. It doesn't need any help on that, but now this was the craziest price action that I saw today.
Dude, can you imagine he buys triple Qs?
I mean,
the economy would collapse.
That's when you get a 10% diff.
He posts that he buys triple Qs, and then they're like, job numbers are revised down. We lost it. It's just instant economy collapsing.
Yeah, World War III starts. Yeah, exactly. Yeah. So, the craziest price action I know we wanted to talk about is Tesla. So Tesla started out, and it just, I mean, you can see where it peaked right here, right in the morning, right when we opened.
Penny stock, bro.
What's that?
Tesla's a penny stock. Look at how
penny
it moved.
Stock. Yes. 232 down to 210. So just like it was up, what was it, like 4% earlier this morning, down to negative 8%. Like everything was volatile and bloody towards the end, except for those stocks that were included in the S&P 500 at the end of the day. But yeah, Tesla just like I have shares, and I also am wheeling just one position on it. That's what I have, capital for. And with the premiums, I just buy extra Tesla stock every single week. So, but I was like, oh yeah, I had 210 on my cash secured put, and we were at 230. I'm like, hey, I'm just going to go ahead and close this. And as we were falling, I'm like, okay, it's like 215 or something. And I'm like, yeah, I'll just go ahead and sell for this next week. And it fell even more. So just kind of shocking. Rate cuts, though, like for Sofi, will help Tesla. It's kind of weird that they went down this much today, but this is not a stock that trades on fundamentals. So,
October is coming around the corner for Tesla, so keep that in mind. It's probably going to be a sell the news event, but still keep it in mind because it might rise up leading into that. But it's heavily macro dependent. If the entire market's shitting the bed, then obviously Tesla's not going to hit like 270.
Are you? What are you believing for this event coming up? Because I know whenever they pushed it, they said something about more prototypes, these sort of things. What are we seeing?
I think they're going to announce a new model. Holy, nice pass.
All right.
I think they're going to announce a new model, and then they're going to showcase the app and then how that would work. I think the Smart Summon, and then they also released a roadmap. Tanner, if you go onto my profile, I posted recently, I think yesterday or 2 days ago, about the Tesla roadmap, but it goes as far as Q1 2025. And some of the big items on that roadmap in 2025 are expanding FSD out into Europe and into Asia. But up until that point, like Q4, They have Cybertruck Auto Park. They have Cybertruck FSD. They have a whole bunch of stuff. More FSD improvements. The actually Smart Summon was released, and so a lot of that stuff I think is going to be complementary to what they announced in October, and they're going to have some type of rollout date or work back schedule as to when people can start expecting this, because it's obviously going to be pending regulatory approval. But similar to the other, announcements for vehicles, right? Like there's a pretty big gap from the announcement up until the actual, production / rollout of these. So it's excitement for sure, but at the same time, it's not going to be like manifesting on day one. It's just them sharing more of the vision long term. So looking forward.
I'm getting really excited on Tesla. I mean, FSD is this thing that I think people have been perpetually pushed off for so long that they think that it's this event that's never going to happen. But driving is not getting harder, and FSD is getting smarter. It will reach a day where it can end up sort of solving that problem, in my opinion. Yeah. And whether it's the advent of AI or their ability to get more cars on the road or the free trialing to get more miles, whatever the catalyst is that they're making such large advancements here is definitely advantageous for long-term shareholders, I'll say.
Well, I think the story has changed, right? Because Elon himself said on earnings calls, he said, look, flat out, if you don't believe Tesla is going to solve FSD, then sell the stock, because that's the bull case here. That's the narrative going forward. And so I think the step change in their growth story hinges around FSD. And like that's the multiple expansion, right? Because the factories and the production numbers and how many units can they produce versus sell, that's like the percentage increase. That's a linear growth. But the step change is FSD, because if they can get a robotaxi network going, then that's like a completely new ecosystem they're playing in, a completely new paradigm they unlock. And so it becomes a very black and white thing, whether you believe it or whether you don't. And based on that, whether you hold or whether you don't.
Yeah. Hey, Tevis, I've got a question for you. Did you buy Tesla today?
I did not. No.
Okay. I was just thinking the price action was so weird. Like that could explain it. Like you're like, hey, it's 2:30. Let me buy some shares and just, I don't know.
You bought it in extended hours yesterday. It opened up red.
We're all bullish on Tesla. This is your largest position, right, Tevis?
It is my largest position. Yeah.
And I believe it's my second largest, but it's close to my third largest position as well. So, Tanner, where does it rank on for you? Is it?
I think it's my fourth largest position right now.
Yeah. Yeah, this is like the roadmap I thought was really helpful. The actually Smart Summon announcement, I thought that was really cool too. That myself, I tried what they've relabeled dumb summon, and it's very accurate. It was pretty much unusable. It was really, really dumb. Didn't make any sense, but actually being able to have the vehicle move around in a parking lot, back up as well is necessary for the robotaxi network. So it came at an opportune time. I can't wait to see it in person. That's actually the feature that I get asked about more than anything else is for my Tesla is, can you have your car come and pick you up? It's like in the past is like, no, I really can't because summon is really dumb. And now, yeah, sure. Why not? So it'll be fun.
I actually got a good question here. We're going a little bit backwards in our conversation, but back to SoFi. Dat here says, when do you guys think SoFi will be included into the S&P 500? Because I think some people don't understand that there are requirements, and maybe some people need to understand the implications of what this means or when SoFi can get in. So, Tevis, what are your thoughts?
Yeah, I can start. I think obviously, why do we care about any company that we own getting into the S&P 500? It unlocks a lot of these funds that track the S&P to essentially buy in. And so you're going to get a ton more ownership piling in to that company, and that's obviously going to drive the price up. And
it's
so
not that they gain awareness of the company. It's that if they're passively matching it, they'll be forced to buy it.
Exactly. So that's why we care. I think for SoFi, like I saw Kyle posting about this on Twitter, like, oh, 4 more quarters or whatever. And the most famous, I think, requirement that people look at is the 4 quarters of profitability. But there's also market cap requirements, and SoFi is under them. I think it's like 15 billion minimum or something to that effect.
I think it's even up to 18 now.
So the point is, and SoFi is like 8 billion. So SoFi needs to get its ass to $20 a share as soon as possible, and then we can start counting down for when SoFi might be in the S&P 500, because right now they're not eligible at all.
Yeah, and they tend to not take in companies that are just barely eligible with market cap, with profitability as well. So that's certainly a factor. Now, it's one thing that is working towards SoFi's advantage is we know that the stock is heavily held by retail investors, that there's not as many institutionals, but that's also the case for the company that I can't mention that got in today. That is my majority position. It's very retail driven. And so this is not something that holds back a stock forever. That's one of those like unwritten requirements, but it's not really there. But typically, it does mean that there might be a little bit slower adoption. We've seen that in the past with some other names, but that's not always necessarily the case. Now, each quarter, it depends on how many are exiting the S&P 500. This can be from like mergers, companies going private, or just that they want to kick out. So Intel might have been somewhat close. Maybe if they have another bad like 2 or 3 quarters, they're out. American Airlines was kicked out, and so that can certainly happen. But on average, it's like 3, maybe 4 entries each and every quarter, and there tend to be a number of good companies that stack up. And so right now, as far as my probabilities, I was looking at Workday, possibly AppLovin, Robinhood, and the Trade Desk as being very strong candidates for next quarter. And there's a lot of companies also that are on the edge of qualifying that I think will be interesting to add potentially to the S&P 500. So I would guess maybe 2, possibly 3 years from now. I think SoFi has to grow, obviously. Market cap isn't there yet. I think that SoFi absolutely will, but it's just going to take some time.
Yeah, I like Bullish Jake's comment. He says, so June 2026. It could line up so that by around the time when the performance stock units unlock for the management team for SoFi, it's right around the time they're getting ready to go into the S&P 500. Could be.
And I think maybe Robinhood will be indicative of like how many quarters or how long it would take. Robinhood was qualified as of this quarter. They could have been invited in. If Robinhood sits and waits, a few quarters from now, then that means likely that the appetite for fintech being added to the S&P 500 en masse is just not there. So pay attention to Robinhood. If they get in next quarter, that could be a 2026 date then for SoFi. If company continues to grow and accelerate, hits the market cap requirement, is wildly profitable.
Robinhood's got a pretty cool event coming up that I'm so excited about. Robinhood Summit 2024.
I'm nervous, man. And you know why I'm nervous?
Because you're not long?
Because it might force me to become long. That's just not a bad thing, but I'm not far away from that. Where, I have some companies that I'm interested in. We'll talk about 2 tonight, potentially starting a new position in. And I tend to like very minimal positions. And so Robinhood was a very clean enter and exit. And it's done well for me. But it's like, if they announce... So it seems like Vlad is more excited about this event than the credit card gold event. It's a multi-day event. They're making it a much bigger deal. The other one was their first live event of that sort. And he alluded to his excitement on this over multiple interviews. So I think it'll be a pretty big deal. Will it be like amazing for stock investors? I don't know. But I think, as a user of the platform, I think it's going to be really, really good. And it may be enough to drive me to be a long-term shareholder, which it's tough because I wouldn't mind. It's not a bad thing. it's a great company. I just see it's not as clean, open and shut as it was back when it was trading at like $9 and there was no credit card stuff on the horizon and we were just entering in this year. But I still like it. We'll just have to see if it's enough.
So did we cover everything on SoFi? Because I think there was another aspect that I wanted to cover. I don't know if you guys thought that we missed something.
Nope. The interview, the Noto interview was the only other thing that we'd mentioned. Probably everybody has seen that. I guess real quick, did you guys take anything away from the interview itself?
Forward guidance, baby. Deposits, spending, and net asset inflows are looking good, or the growth in their assets and in inflows in their investor doing good.
Yeah, go ahead.
No, just that 3 sort of part right there was very exciting. He talked about the state of the consumer, the fact that mortgages are going to look good, student loans are going to look good, and they are calling for a 50 basis point cut. They think that that'll be beneficial for them. Not them, but the economy. They're also saying that both for them as well. But yeah, I think he's getting a little bit more brave. He had, I think, a little bit more political commentary talking about how, all the student loan, the loan forgiveness was sort of just a facade, and that it's, what do you call it? Just like, trying to buy votes. Thought that was interesting.
Yeah, and this comment too was on the yen carry trade day where the rates actually dipped, that they saw a lot more interest in the mortgage refinancing. So the exact quote was, "We saw a doubling in our mortgage locks per day during that time." And of course, a somewhat similar.
It's not mortgage locks; it's LOC, lines of credit.
Okay,
yeah.
I was like, "Is that locking in?" I was like, I just figured it was locking in. So line of credit.
because their home equity line of credit product is brand new. So he was saying it's very small, but we're doubling.
Yeah. So there's basically pin-up demand is what he's alluding to. And we've talked about this before, just briefly as a reminder for folks. Federal funds, federal student loan rates are locked in place now through summer of 2025, the way the academic year looks. And so you can just see the green is the Direct Plus loan that's usually for grad and post-grad that just need an extra level of loan. So if they're nurses or something like that. Yellow or orange rather is graduate loans and then undergrad loans here, subsidized and unsubsidized. So they're going to sit, really at this entrance, this rate for the rest of the year. So just around 6%, a little bit above, which is just crazy high. So this also means, in addition to those comments, that in the future, there's going to be some pent-up demand for refinancing or possibly private student loans, especially when students, not every student begins in August. There are some that begin in the spring, and they might be looking at rates and just say, hey, this is ridiculous. And in the face of, let's say, 3 rate cuts in January, all of a sudden, SoFi student loans look pretty attractive. So a lot less competition in the space too. So I'm very excited to see if they're willing to open up the book. It looks like demand is there, especially as rates fall. So should be a good thing.
Tevis?
Yes, I agree.
Okay. I want to pivot the conversation then. There is one stock that I got extremely excited about buying one time. I never actually did pull the trigger. Tevis, however, did. I think he made some money. I don't know. Maybe he's the cause of what's happening. But I want your guys' opinion. I have not been following the story. What the heck is going on with Celsius?
Yeah, so I made a video about this yesterday. The reason why it dropped 10% was because the CEO he spoke at the Barclays Consumer Staples Conference. And essentially, so with Celsius, a lot of the growth story is changing. I don't know where to start here. The growth story
is an energy drink company, right? I'm sorry.
So the growth story is changing, and as you know, a while ago, I think 2 years ago or so, Pepsi took a stake in them, like an
Yeah.
8% stake, and quite around this price, actually, this valuation that Pepsi did take that stake in them. And eventually their revenue split became mixed between like, retailers and then to Pepsi essentially as a supplier. Um, and what happened at this Barclays Consumer Staples Conference here, Tanner, I'll send you the link so I can put up the comments, is essentially Pepsi is ordering less from them than they ordered last year because they have oversupplied. Let me pull this up. Sorry, I didn't expect to be sharing stuff today. Right. Okay. Cool. Present. Let me get the right screen up so you guys don't see the football game. Okay. So throw that up. So this is the CEO, and he basically said that they're seeing a $47 million decrease in orders associated with Pepsi optimizing inventory levels. And what they're seeing year to date is around $100 to $120 million worth of orders being reduced. So essentially in Q3 of last year, Pepsi ordered like $212 million worth of product. And this year they're ordering, 100 to 120 million less. So cutting it by about 50% because they still have inventory on hand. And so everybody is essentially freaking out because they're like, oh, well, that really affects the growth story because Pepsi can't move this merchandise. They can't move this product. And this is significant because right now this accounts for like 60% of their revenue. So that's a big dip. The flip side of this is that the scanner data, so the retail data, is still showing growth. The growth is plateauing. It's not like 23% increase, but it's like a 10%, quarter over quarter increase, meaning that at the stores, they're still growing. They're still moving product. It's just that Pepsi is lowering the amount that they're ordering from them. Yeah, so we're up 10% quarter to date, year over year. Sales are strong. Just to be precise, $120 million figure. We're seeing less in orders to Pepsi in Q3 this year versus Q3 last year. Now, the idea here is, well, I guess the bull and bear case is that the bull case is like, okay, well, this is an overreaction from the market because you're going to have this cyclical aspect when you're going to be a supplier to a large, distributor like Pepsi, whereby, let's say in a couple of quarters, Pepsi runs out of inventory and then they up their order. It's going to look amazing for Celsius. They're going to come back to like amazing growth rates because Pepsi will order large chunks from them.
Just larger cycle.
Exactly, right? The other side is that Pepsi can't move this product fast enough, and it's actually not as high growth as everybody thought it was going to be, and the market is now pricing that in. And so everybody is preparing for lower growth rates. I think the truth is somewhere in the middle. I think the scanner data still being strong signals that, Celsius has tailwinds with regards to their growth. Ultimately, that's why, I bought at $32 a share. And But I think the fact of the matter is, and the thing that is somewhat sobering for this stock is that like you can't keep up triple digit growth rates forever. Like at some point or another, you have to plateau. It's the same thing that's going to happen with Nvidia, if not, it's already happened. That's why Nvidia is seeing a lot of these downfalls. But at the same time, this stock, Celsius, attracted a lot of short-term traders, a lot of momentum, swing traders. And that momentum is like a vicious cycle on the other way down because those same people are not only selling the stock, they're probably also shorting the stock. And so now they're like calling for the CEO to be fired and, because he misspoke or he essentially provided, guidance on this conference. The point being that if you believe that the growth rates are going to bounce back and are still going to be strong, then you should be a buyer. If you believe that the growth story is busted and the growth rates are going to fall, then the market is pricing that in according to their valuation. The fact of the matter is that Celsius doesn't really have any debt. They have, I think, like 900 million in cash. And I think, and I mentioned this in my video yesterday, I think there's a very strong possibility that Pepsi just flat out buys them outright in 2025. And the reason why is because Celsius has now fallen to the levels that Pepsi initially took a stake in them. And, 6 months ago, they were 3x those levels. They were at $99 where they peaked, and now they're at 32. And possibly they fall into the 20s with weak macro. And so I think that Pepsi starts, taking out bigger and bigger chunks and just flat out buys them next year.
How did they buy Celsius? Are they just purchasing shares in open markets, or was it like their own separate side deal? Do you remember that at all or no?
I don't remember. I believe it was like a deal, not on the open market. It was like a partnership because they also it was convertible preferred stock because they also have the distribution agreements, right?
Some people, I see some comments in the chat. They're saying, why buy Celsius over something like Monster? I think the way that you buy anything, growth rates versus their competitors.
Not only that, Monster is absolutely gigantic. Like, they just look at the market cap of Monster, and Monster already owns several other energy drinks of their own. I think Monster owns Bang. Monster owns like Rain. I think Monster owns, yeah, exactly. They own a whole bunch of other ones that I had never heard of before. I think NOS.
Rain and Bang are absolute dog shit. I never see anyone drink them ever. The only time I've ever seen anyone drink a Bang was due to sponsored posts, and if I'm correct, I think Monster bought them out of a bankruptcy.
The point is, like, when you go into the fridge in a convenience store, 3/4 of the shit on the wall is owned by Monster already, and then the other one is Red Bull, and then you have like Celsius, and then a couple of others that are competing by like either Coca-Cola or Pepsi or whatever. And so the point is that it would make sense in Pepsi's portfolio, given the market cap of where it is, given the fact that they already have a distribution agreement, so they have those channels set up, given the fact that Pepsi already owns a significant stake in the business and they already have a working relationship. It's just synergistic.
Sure. Yeah. Yeah. You said that there was some data. I forget the name of the company that publishes that retail data, but how are they looking there?
So on the Nielsen data,
yeah,
I'm trying to remember off the top of my head. The market as a whole is not really growing that much. Celsius is still growing, although the growth rates, again, are falling. So that's something to keep in mind. But the other thing is that, like, you have a whole bunch of international expansion still ahead of this company. So I think that they can make up for a lot of that. There's probably also some some seasonality associated with just the overhang of people, doubling down on energy drinks as a fad or as a theme, and then now reeling back somewhat. Again, so I like, yes, I acknowledge the growth rates are lower than they were. They had some pretty tough comparable trends, and the triple-digit growth rates are not going to be sustainable. But on the flip side, you're getting a valuation that reflects that.
How much are you buying, Travis?
Travis. So this is like 0.5% in my portfolio. I'm going to bring it up to like 1%, maybe 2% if I'm feeling really crazy. And like, that's it. I like Hims more than I like Celsius right now. I like Sofi more than I like both of them. So again, like, I know that Celsius is a stock that, like, I always show up with one of the energy drinks on the podcast. It's like a sexy name that I like. I actually, my entire position right now is still profit from my leaps, because I bought 2026 leaps, and this thing went from $50 to $88 where I sold it in a matter of like a month, maybe 3 weeks. And as you can imagine, those leaps went haywire. And it was just like too good for me not to sell it. And I bought a little taster position at like in the 60s, and I only like doubled it basically right now in the 30s. I think my cost basis might be like, I don't know, 40, 42, something like that. Um, I think it's going to fall into the 20s. I want to buy more if it falls into the 20s. But again, I'm tiptoeing around it a little bit because if the scanner data starts to decline further, if Pepsi doesn't order whatnot, then this could become a more of a long shot because of the risk associated with those growth rates diminishing. But I still think that like the little X factor associated with Celsius that I think, it's interesting to me, that appeals to, that gambler mentality part of my brain, is that if Pepsi full outright buys this company, then, I think that right now they're getting a price. And there is conspiracy theories out there. I've seen some people on X saying like, oh well, Pepsi can like artificially control how much they order from this company, and they know that that's gonna disproportionately affect their like market cap because the what do you call it, the supply chain, the retail B2B side is like 60% of the revenue. So if Pepsi's like, hey, we're no longer ordering from Celsius, and Celsius tanks to 5, and then Pepsi swoops in for a deal to buy them at 12, it's freaking ruthless. But hats off
to them.
Yeah.
But that can easily backfire, and they could just approach Monster and be like, hey, these guys did us dirty. You want to buy us for 20? And
yeah, but like on that sliding scale, they can fall anywhere there. So my point is like, it's not as clear cut as you would think it is. There are risks associated with it, but you're getting a price that prices those risks in.
Yeah, I actually bought Celsius yesterday. Excuse me, I misspoke. I bought a Celsius yesterday.
I saw this.
Drank it today. Compared it side by side with the Monster, and yeah, it's that my favorite flavor is the peach vibe. It's pretty good. It's not as good as Monster, so that's not a reason to not buy it necessarily. But the reason why
did you have a regular Monster? Like, did it have sugar in it?
Oh no, it's sugar free. It's peachy keen, I think, something like that. So just peaches to peaches comparison. But the reason why I've been holding off is I've been seeing a lot of really inexpensive prices compared to everything that I've seen since COVID in energy drinks, and so Monster I ended up buying for $1.50 a can, which is the lowest I've seen at least since COVID. Other than buying it like in bulk from Sam's or something like that, which I haven't done in a while anyway, so I'm not sure what that price is now. And then for Celsius, same thing, $1.50 per can. This is USD, not Canadian. Otherwise, that'd be an insane deal. And a lot of other brands there on the shelf that are coming down in prices. And so I think that the market itself, at least here in the States, is quite crowded. And so we're seeing some pricing wars. That's not good for margins. I think that, what Teva said as far as like the Pepsi deal and everything, that makes good sense. But I think that they might have some margin compression instead of expansion like they've been seeing recently. And so that may impact them. I do think that they have a bit of a interesting niche, just that they're able to hit the gym culture and the ladies fairly well. And I still see that continuing. There's people that are diehards on Celsius in a way that I don't typically see outside of Monster and Red Bull. So I'm interested at a certain price. For me, I get pretty interested at 25, but for me, it'll be a swing trade, not a buy and hold forever. Just not interested in it. Unlike Hims, if we want to pivot that way, and actually you might have some thoughts on Celsius first, Tanner.
Yeah, I just wanted to say, I think the buzz around Celsius, at least for me, is over. It was crazy. I was seeing it everywhere, posts all the time. It was coming into Canada. Everyone was, getting it. I was buying it by the case, and now I don't even buy it at all anymore. I don't see posts about it as much, I find. So I don't know. I just feel like it sort of blew right past me. And the stock is sort of reflecting that in a way. And now I find that there's so many healthy energy drink options, especially where I shop. Like I shop at Costco. I was buying Celsius by the case, but now, Prime is in there. Alani's in there. Like there's so many different choices for energy drinks that if you do want a health conscious or health leaning, I've got to be careful. It's still an energy drink, right? But
Yeah.
if you want a caffeine replacement at a cheap price, like I just got a case of Prime Energy, and on a per can basis, it was less than $1. I'm not buying Celsius. There's not a chance. It all kind of tastes the same for me. It's sugary juice. Like, I don't know.
Yeah, pay attention, and I'll be doing the same thing to those deals, those prices. Like it's not a great thing for Celsius, even as they're expanding. I do think that there's some sort of a floor that Tevis indicated with a buyout. Doesn't have to be Pepsi, but that's not why I'd be getting in. So I want a cheaper valuation. Sometimes, though, if we want to pivot to Hims, this is another interest and holding, I believe, of Tevis's. Competition does the opposite for me. And in this market, in the telehealth market and prescription medicine, Hims has a lot of competition that's hitting different aspects of what they do. Some of it's been around a while. Some people like Walmart have gotten out. Costco is rumoring to be getting in. Amazon had an announcement that I received today, though it's not exactly the same thing that Hims does. There's some overlap there. Eli Lilly a week or 2 weeks ago that caused the stock to come down some. In that case, at least to me, and I could be completely wrong, the competition validates the thesis. They're chasing something that Hims is very interested in. And what's different about this play than Celsius, at least for me, is the competition for the telehealth and prescription medicine companies right now is not each other that much, but it's the old guard, the old way that the system used to do. You don't have that as much with the energy drink stuff. I think maybe initially when Red Bull and Monster came in, that their competition wasn't really each other for energy drinks, but just developing that market and saying, hey, this is a real legitimate space. Here's an alternative to coffees, sodas, teas, what have you. But now it's that head-to-head competition with energy drink players versus where we're at with telehealth medicine. So the competition is, I think, less daunting, and I think that Hims has a very unique position in it. So I don't have a position. I am interested in that at a certain price. I still need to do more due diligence, but that one, if I got in, it'd probably be, a longer term hold.
That one's a really hard one for me. Like I think it's going to be another one that I just watch everyone make money on around me. Because as a consumer, I would never use it. Like, even if I was like having a problem with hair loss or ED or something like this, I would just choose the much cheaper option from a company that I know is, to some extent, very trustworthy. Much larger brand, much cheaper formula. Why would I not go with Eli Lilly rather than Hims? And they're going to have the marketing spend to fight. I don't know.
At least right now, I think they're just getting in one product. That doesn't mean that they won't expand, especially if they're successful. But there's room for both.
Right. It's the GLP-1, but I just mean, like, if the competition is super strong, I don't know how you can have such high gross margins in this industry without that coming down. And why does that deserve a stock multiple? If the multiple can, like, if you're at the top of your margin expansion, I guess, if the pressure is only on the downside.
Yeah, there's just a whole lot of growth that could be had at the expense of the existing establishment, the orthodoxy versus the new guard. And so I don't think that this kind of competition would impact margins much at this point. Okay. They don't. It would be similar to Red Bull and Monster when they first kind of came on the scene, that they had insane margins just because they could. Like, there was nothing like them. There was, but it was like old hat, soft drinks and stuff. Like, this was something new and exciting, and people loved it. And telehealth has been around for a while, but like, you have companies like T-Doc that are just absolute jokes as far as management. Product was okay-ish, although the last time I used it, it was lousy.
But I wouldn't buy that one either.
That's actually one of the reasons why I stayed out of ARC-G, thankfully. It's like Kathy Wood kept buying Teladoc. I'm like, nope, I'm not touching that.
I think there's a couple of pieces here. Hims does have a telehealth, aspect of it, but it's paired with the actual products that they sell. So it's contextual. And the telehealth aspect, I compared it in one of my videos explaining, my initial rationale for investing in Hims as the what do you call it? The relay of Hims. Like the telehealth aspect is the data play that gets people into that sort of ecosystem of recommending what products they should be using. And they can then leverage all of that data that they collect. And it's extensive to then cross sell other products, number one, but also to have a running list of, new launches that they're going to have and who to recommend those to. I think the competitive advantage with Hims is a couple of things. First of all, it's a subscription product. So from a cost perspective, it's much more manageable. The average order value is like $50 a month. I don't have to go and buy a $500 like one-time hit for, whatever over-the-counter thing I'm looking. I can just pay the subscription. Second of all, it's like the stickiest subscription you can ever find, because if I find a product that works well for me, it's not like a Netflix subscription where it's like, oh, there's a new show on HBO. I'm going to cancel Netflix this month. I'm going to go to HBO. No, it's something to do with my health, and people take that very seriously. And so if there is something that works for me, the willingness for me to change and try other things, there's no rationale of why I would do that, because I already have something that works well for me.
Yeah, I think that's probably the biggest bear case, or not bear case, but the thing that holds me back a little bit from Hims is the idea of like, are these just really good marketers? Like a HelloFresh, for example, but then everyone just churns off the subscription. Or do they, keep a sticky customer?
It depends on what other alternatives you have, right? So for HelloFresh, for example, like I can go to the grocery store, I can, get fast food, I can cook at home. Like there's so many different options, but it's like if I'm having hair loss, like I don't really have any other options. I'm going to keep using their subscription until I actually churn off of their product and go to something else altogether. So there is no there is no pause there. Of course, you have to throw that up. And then I think the other thing to keep in mind is that the personalization aspect is going to become stronger with every new product that they launch, because you can, number one, modify the form factor of, do I want like a lotion or a spray, or do I want a hard candy or a gummy or whatever? And then number two, you can cross pollinate different, types of pills, so that instead of taking 4 pills for 4 different things, I can just take 1 pill for all 4 things. And that makes it's a sense of convenience for people. Right now, they have about 1.9 million members. The margins have stayed pretty consistently over 80%. I think the highest was like 86, something to that effect. The lowest was like 81. I think right now they're about like 82, 83-ish.
Isn't the large competition problem something that's happening, that's starting now with Amazon and Eli Lilly and all these talks?
But there was always competition in their different product lines. I think they're going to have different competitors in different spaces, because, and again, so the subscription and the personalization aspect is the moat as I see it. Because if I can have, and especially with products like these that have stigma associated with them, if I can have a product that's delivered to my house and that solves multiple use cases for me, then I don't need to, make a trip to the pharmacy or make a trip anywhere to try other products. It's more affordable, it's more convenient, and like it solves multiple problems. It's sticky from that perspective as well. And one thing I will say is, of the 1.9 million subs that they have right now, less than half of them are personalized subscribers. So the majority of, and that's the fastest growing segment. I think that's growing like 170% year over year, something ridiculous. In a couple of quarters, they're going to cross that tipping point where over half of their subscriber base is personalized. And that personalization, to me, is really the main factor, because once people try the personalization aspect, they have something that's absolutely catered to them. That's the thing that's going to keep them more reluctant to change, because all of a sudden, you know, let's say I have hair loss and then I have something like skin problems and then I have, I want to try the weight loss things. If I can take one pill for all of those, then I'm golden, baby. Like I'm never going to switch that out. Um, so I think the more people try the personalized product offerings as opposed to the generic product offerings, like the one-offs, then that's how people get deeper into that ecosystem. At least at a very high level, that's how I'm rationalizing it right now. And the other thing I'll say, Tanner, is like, yeah, people are going to enter the space, Eli Lilly and Amazon and others, and I don't disagree with that at all. But right now, like, there's hundreds of millions of people that are the addressable market only in the United States for any of these, for the sexual health, for the skincare, for the hair loss, for the weight loss. There's like hundreds of millions of people that this is applicable to only in the US. Their entire user base is 1.9 million people. And so there's so many other product lines that they can go into that has like 100x basically total addressable market relative to their total user base. They're so in their infancy of their growth story, it's ridiculous. And I think that's the main thing. And then at the end of the day, you have a company that's a $3 billion market cap. They have zero debt. They have 200 million in cash. They're profitable. And they're growing, subscribers 43%. They're growing revenue 52%. And they're doing $100 million in buybacks over the next 3 years, right? Like this and they have an 80% plus margin product. So there's really a lot to love with the business, not to mention that they launch a new product every single quarter. So every 2 years from now, they can have 2 new pillars that we haven't even thought of right now, and then cross-sell and bundle those with their existing ecosystem to further personalize more things and further entrench people deeper into their moat. So I think there's a lot to love in this story.
Yeah, I mean, maybe I should give it another thought. And I just thought it was weird that before the show you said that there could be a possible collab with Unity and Hims to bring dick pills into the metaverse. I thought that was weird. Were you serious when you said that?
That joke was bad before the show. It's still bad.
In all seriousness, I want to know if, because one, I want to find an investment that is outperforming the S&P 500, but also now we have Tevis risk, right? If Tevis owns it before I do, then this can be a serious problem for my portfolio.
You just have to wait for him to stop buying. And so I think that Tevis will keep buying until maybe about $10 or so. And they'll just say, my position's good enough. That's at least what I'm hoping. And, 10 is an arbitrary price figure. I may be interested in going in a little bit higher than that, although we're not that far away. But yeah, as far as competition, I love what Tevis said. This business, unlike Celsius, where I know there's international expansion and stuff, but they're not wildly far away from reaching the accessible TAM for them. Versus this company is still very much in its infancy. They have a ridiculously clean balance sheet, and I love companies like Robinhood and the one that I'm not going to name that just they have no debt. And they're doing buybacks on top of that. This is a phenomenal thing to be doing. I really think that Hims will grow to the point where at some point in the future, probably before SoFi, that they'll get the S&P 500. And competition doesn't always make it. So not exactly the same thing. They're actually closer to Teladoc, but there were some prescriptions that they had remotely as well. Walmart actually is exiting the space, or they exited this summer, where they ended up selling all of their MD virtual care services that they were setting up. And They really gave this a good push a few years ago. I thought maybe it would be successful. It's not. I think Amazon might end up having the same fate, although, I mean, we'll have to see. Eli Lilly will probably be okay, just because this is what they do. It's their bread and butter. But competition is not always successful. Hims is killing it, and I think that they will be. So,
ladies and gentlemen, that is the SoFi Weekly. I don't know. Personally, this is where I'm at in my head. This is more fun for me to sit back and learn a little bit about investments that I don't cover and I don't invest in right now, but I'm looking for opportunities. Talking about the same bull case on SoFi every freaking week whenever we don't have news. Why force a story whenever we can talk about what's hot in the market? You guys let me know what you guys think about that. But I think Tevis and Roy are all on the same page. Maybe not Tevis, I don't know. But anyway, thank you all so much for watching. Really do appreciate your time. If I can ask one thing of you guys, follow us on X. You can see all of our X's right there. Bing, bang, boom. Bye for now.